and also PUFE transactions, particularly in PUFE also related party transactions are also there during the CIRP process. Up to 5 o'clock, I will discuss about all these things. And 3:30 we will take the tea break, and up to 5 o'clock I will continue the class. Now coming to related party. Today favoritism is increasing in almost all areas. That is my perception thinking. And whether it is any recruitment or extending the contracts or purchasing any raw material or extending any credit facilities by the company to the particular buyers. Favoritism. In that particular favoritism only, they are always preferring their friends, their relatives, their known persons. All these things are happening in almost all, because in a Companies Act also, the related party transaction, special attention is also there. In balance sheet also, that is to be disclosure norms are also there. So, everybody is preferring the particularly whether it is in recruitment or the raw material supplier or extending credit to their known persons, all this day to day it is happening. Whenever they are purchasing any assets, always they are preferring, if at all any known person is there, they are preferring the known person first. So on account of this related party transactions, the company is losing a lot of amount. And thereby the ultimate sufferers are the financial creditor or operational creditor or the equity shareholders like that. And even in the financial system also, some people, known people, they are getting loans easily when compared to the others. So it is, that's why from time to time, the particularly in Companies Act, they are providing the particular related party transaction, how to verify and what type of related transaction, what is the relationship, all these things are defined clearly. And whenever the auditors are verifying the transactions of the company, they have to give special attention on related party transactions. In a normal companies, I am talking about normal companies. But CIRP also, we have to plug out, we have to remove, or we have to identify and they brought to the notice of the COC or sometimes the adjudicating authority also. And if at all related parties are there in the committee of creditors, then automatically decisions are taken by the COC is entirely different from the normal course. So there also, once a COC is formed with a related party, there also favoritism from the corporate data point of view. So that's why the related parties of financial creditors are not part of the committee of creditors. Not part of the committee of creditors. So that's why we have discussed, I will discuss about all these things up to 5 o'clock. Now coming to one of the most critical responsibility of the IRP, because during IRP tenure only, the verification of claims are happening. In the claims, whether the claim is the non-related or related or genuine or not genuine or secured or unsecured, all these things are during the time of particularly the time of the IRP only, most of the things are happening. And is to identify the transaction that adversely affect the assets of the corporate debtor. Once the related parties are there, then the corporate debtor assets they adversely affect on account of related party transaction. How it affects on all these things in the coming slides I will discuss. Many distressed companies transfer valuable assets, favor selected creditors. Why they have selected that creditors? What is the reason? Why not others? Why always he is purchasing raw material from X person? Why not YZ? Even though number of suppliers are there, why he is always selling one product to one person only? If at all so many buyers are there, and they are always favoring the promoters or group entities also. And before commencement of a CIRP, before CIRP, whatever the damage is there, the damage is completed. That's why the PUF transactions are also to be verified with the help of the forensic auditor by the resolution professionals. These transactions are reduce the asset base available for creditors and defeat the objectives of the IBC. Once the related party transactions are more, then whatever the profit is declared by the company, whatever the assets value or the liabilities, all are to large extent window dressing. So we have to curb that particular related party transaction. Because in company secretaries, particularly, they are experts in this area. Why? Because in a Companies Act also, the number of sections or related parties are there. And they are thoroughly examined that a particular transaction is a related or non-related. Accordingly, RP is required to investigate and identify. Your prime responsibility is you have to investigate. If at all top are the big transactions are there, the value wise high amount of transactions are there, you have to investigate and identify whether it is a related party transactions or not, whether it is a preferential transaction or not, or whether it is a undervalued transactions or not, or fraudulent transaction or extortionate transactions, etc. Today, most of the companies are falling to sick or defunct, and the financial creditors are submitting their application under Section 7 in NCLT. In most of the cases, the companies are not fall overnight. Most of the companies, the fraudulent transactions are there. They are siphoning the funds. They are eating away the funds. So that's why here, if at all the PUF transaction introduced in India, the particular IBC is also a good thing, because they predicted the preferential transactions or undervalued transactions or fraudulent transactions or extortionate transactions, most of the cases. Why? Because in the companies, how they are functioning, all these things also they experienced, and accordingly they have introduced the PUF transaction in IBC. Collectively, these call PUF transactions, particularly whatever the extortionate transactions or avoidance transactions or PUF transaction like that. Early detection enables approach the adjudicating authority for appropriate relief and maximization of value. So on the day one onwards, whatever the transaction, if at all you are verifying the claims, during claims also, if at all you are not exercise caution, definitely most of the claims, the related party transactions are also there. Whether the transaction is a genuine transaction, whether the transaction is related or non-related, all these things are thoroughly to be examined after giving the public announcement by the IRP or RP. So once you have identified, that is brought to the notice of the COC as well as to the adjudicating authority. Why? The maximization of value. If at all one transaction, they one sale of the asset, the value of the property is 10 crores, whereas they have sold the related party for 5 crores. Thereby, the maximization for 5 crores shortage is, it is not a maximization. To maximization of the particular CIRP process, we have to identify, we have to brought to the notice of the COC, we have to inform to the NCLTA for proper relief or reversal of these transactions. Take for example IBC also. The related party transactions are defined under Section 5, subsection 24. And the duties of all RP also defined under 18. And duties of RP also 25 also they have defined. And 43 or 45 or 49 or 50 or 66, all these things, either whether it is a preferential or undervalue or defrauding the creditors or extortionate or fraudulent transaction like that. Even in the regulation 35A, also CIRP identification reporting of the PUF transactions and brought to the notice of the COC as well as to the adjudicating authority for reversal of this transaction or for solution. Otherwise, if at all these transactions are not properly identified or the properly not identified, then the total CIRP system is become a wrong CIRP process will happen. So that's why the related party transactions are to be identified clearly, or with the investigation skills are also required to the RP or IRP, whoever is there. Why detection is important? First of all, the fiduciary responsibility. The RP is a fiduciary responsibility. Independent. Because whatever the decisions, whatever the procedures he is following, it is a fiduciary responsibility. And he has to preserve the assets of the company. And he has to maximize the value of the company. And he has to protect the creditors. He has to prevent the diversion of assets of the company and recovering the siphoned assets of the company, and maintain the fairness among the creditors. For that, detection is very important. If at all that the skills are not there, take the assistance of the particular experts in this area, that is a forensic auditors. And for this also, if at all you go through the particular related party transaction in depth, definitely it is very easy to identify the related party transaction. Improve the recovery and resolution plan or liquidation. If the assets value, whatever it is showing, it is less when compared to real value, then it is not a maximization. The real value and the present value of the asset should be the same. Then only the maximization of the particular CIRP, the maximization value will happen. Otherwise, it is not up to the CIRP is not conducting as per the guidelines or regulations of the IBC. Why? What is a related party transaction? Okay, we are talking about a related party. But a related party identification is also very difficult. But if at all you are practicing that one, then it is not that much difficult. A related party person is a or entity having control, significant influence, or common management in the corporate data. And examples, the promoters. If at all the board of directors are awarded contracts to the existing promoters, then they are colluded, and thereby the favoritism, thereby it affects the value maximization. Most of the directors, I am interested in this area, in this contract, or my son is there, or my relatives are there. Why can't you give that contract or supply of raw material, or if at all the debtors are there, why can't you give credit to my relatives? So here, the promoters and directors are very much interested in data, because day to day, what is the financial transaction that are happening in the company? Always they are closely monitoring the transaction. Thereby, they know the value of the financial transaction. If at all that is awarded to their relatives, then it is advantageous to them. So if they are started like that, there is no end. And whatever the value of the contract, they will escalate, or even the contract is not up to the mark, still the company is pay the amount to that particular contract related, the director relatives, all these things. Relatives of the directors and the board. Board is a trustee. The trustee is appointed by the shareholders. So they whatever the shareholders appointed and identified whether it is an independent director or the whole time director, they have to provide the whatever the best corporate governance are there, that is to be fulfilled. So once the directors are doing like this, in the next annual general body meeting, normally the shareholders will remove the directors also. So relatives of the directors, particularly big companies, number of financial transactions are happening. And some of the transactions, relatives of the directors are also handling. Okay, if at all relatives of directors are handling that particular contracts, no problem. The arm's length is required. And once it is there, you brought to the notice of the board of directors. And whenever the decisions are taken by the board of directors, you should not participate. You should not give any voting right in that particular the agenda and holding companies and subsidiary associated companies. So some of the before CIRP, some of the corporate data, they are transferring the assets, they are giving security to the loans borrowed by the holding company, by the subsidiary company or associated company. Like that, this type of transactions are happening in the particular companies. LLPs controlled by promoters. Some promoters are controlled. These directors are the promoters of the corporate data directors are the promoters of the limited liability partnership companies also. Or some companies, the partnership firms also directors. And HU, Hindus, the Hindu undivided family of promoters also. Or some trust. These directors are the members of the trust are controlled by the promoters or some key managerial persons or companies under common control. So all these things, if at all it is happening, it is nothing but a related party transaction. So as a IRP or RP, you have to thoroughly examine the assets, the liabilities, even liabilities also related party. If at all X amount is there for related party, they will add X plus 10 or X plus 20 like that. So thereby, even the liability will increase and the assets, if at all they sold it to the related party, always the assets will reduce and sell it to them. Not only that one, even purchases or the creditors or debtors also. And why related party transaction need attention? Most of our transactions involve related party transactions. The preferential, the undervalue, the extortionate, the fraudulent, normally it will not happen to other than the related party. The companies are taking more caution for a non-related, but a related party, all of these four, the PUFE, preferential, undervalue, extortionate, and if you ask the particular forensic auditor, prepare the report, after providing the report by the forensic auditor, you verify the forensic audit report. If at all the forensic auditor is a capable person, and most of the cases, most of the transactions are related party and PUF transactions. The detection skills are required for the forensic audit. Whenever you are appointing any forensic auditors, you have to verify the antecedents, the experience, the skills, how many handle, what type of the reports he is given. Some interaction is also required before appointing any person, or if at all you are going to identify the particular forensic auditor, not simply based on the person is having audit skills like that. the forensic audit. In-depth knowledge is required to identify the related party transactions or the preferential related party transaction, undervalued related party transaction, fraudulent related party transaction, extortionate related party transaction. Lot of skills are required. They can be influenced by the promoters. Related parties always they are influenced. Boss, I am supplying the raw material. The raw material market rate is 20 rupees. And the promoters are colludated with the related party. The invoice prepare 30 and kickbacks. So what is the market value of the raw material? Suppose if at all you are verifying the clients, particularly that product on the material time, what is the market value? That is also possible. That is also possible. Once the market value per kg is 20 rupees, why he is charging 30 rupees to the company? So here he will influence not only that one by selling the asset. The asset value is 10 crores, but the sale value is 5 crores. Why? The asset value, book value is much more than the sale value. What is the reason? What is the reason for that? And the documents may be fabricated also. And today, the documents of fabrication and fraudulent invoices or bill of exchanges or all these things are happening. Assets may be transferred without consideration. Once a company assets are not the ownership is not by the directors, it is the promoters. The promoters are the shareholders. The shareholder assets, the directors are they selling the asset without consideration means it is purely a fraudulent transaction. It is not his own asset. Today, if at all you study the forensic audit, even Securities Exchange Board of India forensic audit is there. Even in banks also forensic audit is there. And the forensic audit importance is also increasing. Today, forensic audit not simply verifying the vouchers and other things. The forensic auditors has to use the artificial intelligence, the machine learning, application program interface, or blockchain technology. So many things are there. The technology tools are also to be implemented. Simply verifying the voucher and the ledger. Ledgers are not available. Voucher online transaction. So documentation fabricated. The wrong invoices or duplicate invoice or number of invoice for one sale transaction. One sale transaction, particularly one purchase of raw material, number of invoice on different dates from the same. But if at all you compare the invoices with the stock ledger, only one time stock received, remaining if at all they fabricated 10 times, 9 are fraudulent transactions. Assets may be transferred without consideration. And the loans never been recovered. Because the promoters are there. The promoters' relatives are there. The company is giving some loan, but they are not asking. Not only loan, even a supply of the goods. They will supply the goods and they will be treated as a debtors. But they are recovering the other debtors, not this debtor. After a certain time, once it is crossed 180 or 360 days, they will write off. Once they, what are the write-off accounts? How many write-off accounts are there? And in debtors, you verify? For the last 2 years. For the last 2 years, you verify? How many the write-offs are there? Particularly debtors. Or write-off assets. Once the asset is write-off or written off, definitely some hidden agenda is there. Hidden agenda. So loans never be recovered. Even companies, sometimes they are giving finance, but they don't ask. Even sometimes they are giving loans without interest. Once without interest is there, it is 100% It is deemed to be treated as a related party. So loan without interest, even a loan with interest is there, they don't recover. And if at all you verified the data of return of ledger, how many people are there? Why they have write off? Why they have written off? What is the reason? Whether the data or the whereabouts are not known, or what efforts they have made. Without any efforts, if at all they are written off the data, then it is most probably it is to be treated as a related party transaction. Not only this one, the related party as per Companies Act. So if at all you are having a good thought or the transaction, what type of transactions are happening, whenever you are verifying that a transaction, once this particular Companies Act or IBC or the various types of related party transactions, if you go through that one, definitely it will strike in your mind while verifying the claims or the assets and liabilities of the particular corporate data. Not only that one, the expenditure also. Section 2, subsection 76, meaning of the related party. In Companies Act, they have clearly defined. Section 2, subsection 76 provides extensive definition. If at all you see the caselets, particularly in Companies Act, how the related party transactions are happening. Even in the company secretaries also, the caselets are there. What different situations, different scenarios, how the company is managing the related party transactions. Extensive definition. A related party includes director, key managerial person, the relative of the director, or relative of the key managerial person, key managerial personnel, or firm which the director is a partner. If at all the director is a partner in other firms or a partnership firm or a related party, the LLP, limited liability partnership, if at all they have started another firm and the company is they providing credit to that firm, or company is the purchasing raw material from that firm, or firm which the director is a partner, or a private company which director is a member or director. Private company which the director is a member or the director. So today, once the directors, if you concentrate on directors and the key managerial person, they always favoring the related party transaction. This is a big subject in Companies Act. Why? Because today the company fall into sick or non-payment of loan to the bankers or non-payment of the particularly to the operational creditor. Something mess was happened previous years. Once honestly handling by the board of directors, survival of the company is always be there. Once they are doing this manipulation or wrongdoings, definitely the company will collapse like anything. Favoritism always a danger. Favoritism through related party transactions by the corporate data, it is always a danger. It leads to the company fall into sick. It leads to the company face the problem of liquidity, and fraudulent transactions will increase. So the public company in which a director exercises significant influence, and a holding company, and a subsidiary company, or associated company, or fellow subsidiary, or investment company, like that the funds are transferred to one company, or they are preparing the nest And in that next, sometimes it is very difficult to the forensic auditors also. That's why I told today the artificial intelligence tools are to be used to identify the related party transaction. Softwares are there, and the tools are also can be used, and body corporate and common control. Under common control, number of companies are there. They are transferring funds from one company to another company, another company to another company, another company. So here, finally, it is as good as a misappropriation of funds of the corporate data. That's why the company turn into non-performing. Immediately, the bank will file the case, either earlier a debt recovery tribunal or surfacing today the IBC. Section 2, subsection 77 of the Companies Act. What is meant by relative? Relative of the director, a relative of the promoter, or a relative of the particular key manager person. Relative include husband, or wife, or father, or mother, or son, or daughter, or brother, or sister, or step relations as prescribed under Companies Specification of Definition Rules 2014. Today, the companies are failed on account of wrong things and misappropriation of funds. Even whatever the failed companies are there, you verify. And in most of the failed companies, related party transactions are there. Not all companies, most of the companies. So here, the relative definition is also clearly defined in Companies Act 2013. That is under section 2, subsection 77. So it covers the husband, the wife. If at all the director is a lady, and if at all she has given a contract, it is a related party. So, particularly in ICICI Bank also, during Chandana Kochar, she has given a big, particularly the loan to the husband. He is in another company. So, wife, if at all a husband is a promoter, and if at all he has given any contract to the wife, or father, promoter's father, promoter's mother, promoter's son, promoter's daughter, or brother, or sister, or step relation also is covered under the specification definitions of the rules 2014. But okay, it is not banned or barred. Related party transactions, if at all it is inevitable, that is to be continued, no problem. But that is to be approved by the audit committee of the company. Suppose one raw material is there. Raw material is available from one of the director's son only, that only one raw material suppliers are there in the, or different raw materials are there. This supply, the arm's length transaction. And no difference in files, no difference in credit period, no difference in discount, whatever is there, no discounts, arm's length. Once arm's length is there, there is no problem. But still, audit committee approval is required. But that director should not participate in that particular contract whenever the decisions are taken by the board of directors. He should not participate. He should not cast the vote for that particular agenda. So, the applicable companies must obtain audit committee approval for a specified related party transaction. Whenever the related party transactions are there, audit committee approval is compulsory. Audit committee approval is compulsory. Audit committee examines once the related party transactions are there. They will verify whether it is a fair transaction or not. Okay. There is no difference in price. The company is not paying a higher price while purchasing the raw material. Second one is whatever the quality, all these things arm's length transactions. Then that is not a problem. But that should be verified by the audit committee of the company. Then only they have to give the approval. The board of directors should not take the decision. At arm's length, no difference. The price difference, if at all the market price is 30 rupees per kg and the related party transaction 40, audit committee should not approve that one. Arm's length. The quality, the grade of the raw material. And in the similar manner, whenever the company is giving credit sales to the debtors, the same to be applied. The same to be applied. And in the company's interest only. Why we are verifying and because the company revenue should not be misutilized. Once the low price is given, revenue will be affected, profit will reduce. So that's why all the related party transaction, whatever it is required, if at all that is inevitable, no problem. But this is to be approved by the audit committee of the particular company. Section 184, disclosure of interest of the directors. Even they have to disclose. Even particularly in most of the organization, whenever any person is joining, he has to declare whether any relatives to that person working in the same organization or not. Even as a banker, whenever I am transferred from one branch to another, first bank will ask, do you have any relatives in that particular branch where we are going to join? Where you are going to join? If at all relatives are there, I should not work because of some favor. If at all my relative and me colluded in the branch and we may did some frauds also. So, every director must disclose the direct interest in that particular contract. My son is there. You have to disclose. And you come out from the board meetings. Don't participate, don't give any voting right, and don't discuss on that particular subject. And declare and come out. Indirect interest. If at all the circuitous route is there, that also. Okay, sir, this particularly my wife's sister is indirect. He is the party in that particular tender. Partnership interest or shareholding interest. Because I am the shareholder of that company. And you are purchasing that particular raw material from that particular company. So, whatever your shareholders' interest is there, or partnership interest is there, or indirect interest is there, or direct interest is there, you have to declare as per section 184, all the directors, whatever the agendas they are passing. Suppose one tender is there, they are finalizing the tender. At the same time, in the agenda also, particularly those who are interested, those who are having direct interest or indirect interest or partnership interest or shareholding interest in that particular tender, please disclose. Once they disclose, they should not participate in that particular meeting. They should not cast the vote also. Failure may attract penalties. Once intentionally he knows that he is an interest in that particular contract and he has not disclosed. Later on, it was disclosed that he is interested. then automatically penalty will be there and affect the validity of the participation in the board decision. The validity. So once is participated, whatever the decision making taken by the board is invalid. Suppose I take for example, the constitution of a COC is with a financial creditor. If any operational creditor is having more than 10% of the claims, he can also participate without voting right. But you are erroneously identified operational creditor as a financial creditor. Is it a formation of the COC is correct? No. You have identified operational creditor as a financial creditor. Whatever the process that is completed, that is not the correct CIRP. So the validity of the CIRP will not participation of the board decision. So the validity is very important. Once, even though he knows that the contract is belongs to his son or daughter or father or mother or wife, whatever it is, he is not declared, and he is also participated in that particular. First one he will penalize. Second one, the contract is invalid. Section 185 loans to the directors. Loans to the director. This section regulates the loans to the director. Directors, the director relatives, the firm directors, and the companies connected with the directors. Certain loans are prohibited, while others are permitted only subject to specified condition. So whenever the loans are given to the directors' relatives, or firms of the directors, or companies connected with the directors, that is also wrong. That is also related party transaction. So here, the related party transactions identification of the financial very, very difficult. But if at all you are verify each and every transaction meticulously, particularly high value transactions. High value transaction. If at all high value transaction closely monitor, definitely you will find out whether it is a related or non-related one. Section 186 of the Companies Act, loans, investment and guarantee securities. Whenever the company is giving any guarantee, or whenever the company is investing in other companies, or whenever the company is giving loans to the other companies, or securities purchase, regulates, prescribe the limit and approval requirement. And whenever this is happening, the specified approval is required, and the limits are also there. Limits are also there. So that's why Companies Act stringent sections are there. So that's why it is even though it is a challenging one, still it is easy to identify, but the skills are required for IRP or RP to identify whether the transaction is related or non-related. Section 188, related party. This is the most important provision governing the related party transaction, RPTs. It covers sale of goods. As an RP, whenever the company is selling goods, you have to identify the particular transaction. Suppose the company is selling the goods to the others. What is first on credit? On credit, even cash also. Once they have sold the goods on cash, what is the price of the product they have sold? What is the price? They compare with the other buyers also. If at all same rate is there, there is no problem. No problem. Even related party also same price they have sold. No problem. If at all it is a credit, on credit, what is the credit policy of the company? What is the credit policy of the company? If at all delayed by 30 days or so, what is the rate of interest to be charged? What is the rate of interest to be charged? Any discounts are offered or any write-off of these loans or without any interest or whatever the particular credit period, all these things you have to verify. And once the sale of goods in that particular number of both the sale of goods and purchase of goods, here related party transactions are sometimes purchase of goods. Party whereabouts are not known, but created fraudulent invoice and purchases. They will purchase the goods. Market rate is per kg 20 rupees, but they have charged at 30 rupees. And whatever the credit allowed, normally credit allowed by the creditors 30 days. Even in the related party, they will give the terms of the contract is only 10 days. After 10 days, they will charge interest. The prevailing market rate of interest for delayed payment is 12%. But whereas 24% means you have to verify. Why 24%? Once the market prevailing rate of interest for delayed payment is 12%, why this the supplier charging 24%? You verify in detail. The purchase of goods, sale of property. So before CIRP, the company CIRP will not happen on overnight, over a period of time. Once the company financials are weakened means definitely the directors or the promoters or key managerial persons, whoever is there on the helm of affairs, they will start the wrongdoings. The sale of property and the purchase of property also. The purchase of a property, if the market price of the asset is 10 crores, but they have purchased it for 15 crores. Why 15 crores? Once the plant and machinery is available for 10 crores, why they have purchased 15 crores? So here, the related party relationship is existed. Once the favoritism is there, you have put your lens and verify the why these rates differences are there, why it is a high rate. Leasing. Suppose some companies proclaims are there for various land leveling or this one, or hiring of lorries, transport vehicle or logistics. Without a need also, they are hiring the plant and machinery or the machinery or that particular proclaims, etc., etc. There is no need. Once they suppose a proclaim is required at the time of the construction of the production department or office administration department like that. After that, the proclaim for land leveling and all these things not required. But still, every month they are paying some lease rent. So here it is most of the transaction, it is clearly identifiable once the skills are there. What is this transaction? The purpose of the transaction, whether the same transaction happening in earlier years, if the case, what is the rate and price differences, why this transaction is frequently arising, all these things are to be verified by the IRP or RP. Availing services. Today, availing service, some of the promoters, they are not availing services, but bills are generated by the related party and they are submitting the same payment and rendering services, appointment of agents. There is no need of an agent to sell the company products. Still, some of the directors no, to increase the sales, agents are required. Office or place of profit or underwriting. Here, this is happening most of the certain transaction required board approval and depending upon a threshold and applicable rules, shareholder approval, all these things are required. So that's why the related party transaction, number of a transaction, income, expenditure, assets, liabilities, all these areas, the related party transactions are increasing. Section 189, Register of Contracts. Company must maintain a register. So here, as a IRP or RP, you have to ask the company financial, the CFO, can I have the register of related party contracts? So once the related party transactions are happening, they have to enter into the register. One register to be maintained, that is under section 189, whether it is there or not. And the companies must maintain register, related party contracts, arrangements, and interested directors. So that is must. That is must. Not only that one, section 134 of Companies Act. Board's report is also required. Board of Directors report is also required. In the Board of Directors report, they have to confirm. If related parties are not there, they have to mention nil. If it is there, they have to mention. If it are even the related party transactions are there in the company, not mentioned, then it is a board report is a fraudulent one. So the board reports should disclose the Board of Directors report in annual general body meeting for the annual financial statements, annual report also. The board report is also to be enclosed. Material related party, that is to be mentioned. Why material, why related party transaction? They have to justify. No, sir, the product is not available. Only one person is available. Or okay, if a product is available, the price, the quality, and the payment all are same, arm's length. So the justification is also to be important, arm's length nature. How you are justifying, the reasons are also to be elucidated. So section 134 also clearly states the board report. You have to verify the board report. You have to verify the section 189. You have to verify the 188 section, and you have to verify 180 section, 186 with regard to loans investment. You have to verify the 180 section, 185 section, the loans to the directors, and you have to verify the 184 disclosure interest of the directors whenever the board meetings are happening, and you have to verify how many are approved by the audit committee, the related party transactions of the company, how many are approved by the audit committee. If all these things are you are verifying, then you will get a fair idea about the related party transaction. And 129, the financial statements. The financial statement should comply with applicable accounting standards, including disclosure of the required related. So whatever the financial statements are there, the disclosure norms are also there. Out of the total financial criteria that is mentioned in the particular creditors or debtors, or how many are related party transactions. Once the company is disposed during the material time, that is a financial year, whether that goods or the assets are sold to any related party and what are the details. That is to be happened notes to account or related party disclosure, or whether it is a loans or advances or outstanding balance to be mentioned in the financial statement with regard to the related party transactions also. So the related party stringent guidelines are there. That is to be followed by the companies. But if at all you are having an idea about Companies Act 2013 with regard to related party, then it is very easy during CIRP also. And not only that one, 92 annual return. Whenever the company submitted annual return to the ROC, Register of Companies, directors, promoters, shareholders, holding company, subsidiary company, associated company, user for identify the common ownership. In the annual return, what are the directors? And these directors are there in how many companies? Or promoters, or the shareholders, or how many, whether it is a holding company or subsidiary company or associated company. All these things are also mentioned in the annual report. Annual report. You verify the annual report, you will get some fair idea. And this is useful for verifying the related party transaction. Sir, are you getting my point, sir? Are you able to understand, or are you able to listen me? Sir, madam, any doubts up to this point of time? Hello? Am I audible,
No,
sir?
sir. Yes, sir. Yes, sir. You're audible. Clear, so far clear. No issues.
Okay, sir. So the meaning of the PUF transactions. PUF stands for, the preferential undervalue fraudulent. Each has a different legal test. Each has a different legal test. Now, preferential. Detection of a preferential. The transaction is a preferential when one creditor received more benefit than others. Shortly before CIRP, thereby disturbing pari passu treatment. Equal things are not happening. One set of people you are giving preference means that is a related party, preferably, probability. So one creditor is getting more benefit than other creditor means you have to verify thoroughly the transaction. Chances are more that a transaction may be a related party transaction. And on account of this one, it is disturbing the pari passu. All creditors are equal. Suppose I take for example, one creditor is 2 years old, another creditor is 2 months old. And the company is going to face the CIRP. The company paid 2 months old instead of 2 years old. Why they have given preference 2 months old creditor? Why not first they have to liquidate for 2 years creditor? Why they have given preference? And examples. Mortgage created for unsold, unsecured loan. Mortgage created for old unsecured loan. The company is there. They have taken a loan and that loan is unsecured. But before CIRP, the company property is mortgaged to that particular lender. Earlier, it is unsecured. Now, anyhow, the company is going to face the CIRP and they have mortgaged the company property. Then a doubt has to arise in your mind. Earlier, at the time of extending the unsecured loan, company is not mortgaged any property, which is purely unsecured. Why before CIRP, they have mortgaged the company property to that particular unsecured creditor? Repayment made only the promoter's company. Okay. The repayments are happening. So whatever the surplus is there, they are repaying. That too before CIRP only. Instead of paying the amount to the earlier creditors or other creditors, they have repaid the amount to the promoters' companies. Why suddenly they have preferred promoters' company? If a promoters' company is there, it is a preferential. Non-promoter company, they don't pay. No, please wait, we will pay later on. But they are paying that paid that amount to the promoters, where the promoter is a director of that particular company. Selective payment to related parties. If at all 10 people are there, creditors, only one person they have chosen. Why the one person? If at all you want to pay the amount, you distribute the amount, paripasu. And why have chosen one person? And these persons they have supplied earlier, and they are also having they are continuously providing the raw material to the company. Why have chosen only certain persons? Security created before PUFE, PIR, CIR. Unsecured loans, which are extended by the related parties. Then anyhow, the company is going to be face the CIRP. Immediately, whatever the assets are there, they have given as a security to the unsecured loans by the company before CIRP. Thereby, unsecured creditor turn into secured creditor. Once a secured creditor means under the waterfall mechanism, he will get the priority. And the look back period is 2 years or 1 year. Red flags. Large payments before CIR. Why large payments? What is the book entries? What is the invoice? Why what is the purpose of that particular invoice? Whether it is a asset purchase or raw material purchase. If it is asset purchase, whether asset is there or not. If raw material purchase, whether raw material is included in the stock ledger or not. Security credited without a fresh loan. Security created without a fresh loan. So whatever the old loans, they have given security related repayments. They are paying only to the related party, not others. Even sometimes, whatever the complaints against the companies are there, either to ROC or NCLT, you please verify the complaints also. Suppose I take, for example, company is purchasing raw material from 50 people, creditors. Out of the 50, 10 are related party. The company is always paying these 10 people priority they are giving. Immediately remaining 40 people, they complain to the ROC or NCLT. NCLT means not only for IBC cases, NCLTs are also handling the company's disputes, etc., etc. Release of guarantees. Some promoters, or directors, they have given guarantee for the company loans. That is a personal guarantee to corporate data. So before CIRP, what they are doing? Simply, once the company is company unable, they unable to the CIRP adequate amount is not released, then the particular financial creditors they will go for the personal guarantor to corporate data also. So to avoid that one, whoever is given particularly guarantee to the company loans, first they liquidate that one. They will give the priority to that one. Later on, the guarantee, once they paid, guarantee is not a problem. The guarantee will not arise. Then it is they are in safe position. The directors are in safe position. Selective settlements. So many creditors are there, whether it is a financial creditor, secured or unsecured, operational creditor, or a class of creditor. Why the company is giving only for selective people, not for all people are first in, first out, or priority. They are always giving because some hidden agenda is there. Some hidden agenda. Detection of undervalued transactions. What is an undervalued transaction? These are where assets are sold below the market price. So once you open the sale ledger, whether it is a assets or this one, assets ledger, assets are sold ledger, or the sales of the company below market price. If at all you see the invoice, some of the buyers, they are getting the particular, they are getting the goods for low price. Some of them, they are paying high. Why? The discrepancy. So, and without consideration. The assets are sold without consideration. It is undervalued. They are simply given the car, company car, to the others without taking any amount. In that case, why they have given? What is the transaction? If you verify, it will be most probably it may be the related party transaction at a nominal value. The real value is particularly the one fixed asset is there in the company. The value of the fixed asset is 1 crore, but the company has given or sold 1 lakh nominal value. So the real value is 1 crore, but whereas they have sold for nominal value of 1 lakh. Examples: property worth of 20 crores sold for 4 crores. So here, whenever the sales are happening, the sale register, not only the goods sale register, but also assets sold register also, you have to verify. And what is the book value? Once you verify the assets sold register, the details are available. What is the book value? What is the present market value? What is the price? To whom they have sold? And how the amount is they received by the company? All these things. Suppose I take for example land. Normally land value will be appreciated year on year basis based on the location. And the company property land is there. In the land, the land book value is something. Market value is much more than that. Why? Because company, they as per accounting standard, book value or market value, whichever is less. So don't compare the book value in case of land. Even particularly machinery also. We are applying straight line method. The value of the machinery, if at all the machinery is a new one and the depreciation percentage is high, it doesn't mean the value of the machinery will decrease. And the plant worth 15 crores, transferred for 2 crores. Transfer of trademark without consideration. The trademarks, patents, intellectual property rights, particularly in pharma companies. So the value is more. If at all they sold it to another pharma company with a lower rate, you have to the forensic auditor has to mention. And once they have given trademarks without consideration means most probably that may be the related party also. Why they have given free? Without consideration means free. Normally they don't give to others. They don't give to others. Only related party only they will show the preferences. They will show the favoritism. So that's why the trademarks without consideration, you have to verify. And the red flags, undervalued transaction. What are the red flags? Sale below the valuation. Whatever the valuation the property is there. If you see, it is a below. No valuation report. Whenever the sale is happening, particularly the building or other things, the valuation report is ready. Once the valuation, based on the valuation report only, the assets are to be sold. If it are any asset sold by the company without valuation report means small things, no valuation report. But higher value assets, the proper valuation report is required. And a cash consideration. And sale promoters entities and backdated agreements. All these things are red flags under the particularly undervalue transaction. Undervalue transaction. Detection of a fraudulent transaction. Detection of fraudulent transaction. Okay. What is the detection of fraud? How the fraudulent transaction? Cheating the creditors and conceal assets, siphon money, avoid repayment. So the avoid repayment, particularly the company siphoning of the money, that is a natural, the common issue. Conceal the assets. Suppose I take for example, one asset is there. Every year depreciation is 20%. 5 years, the total asset value is recovered through depreciation. 5th year onwards, the asset will disappear from the balance sheet. But the asset value is there. The asset value is there. Some of the directors or key manager person, they siphon, they conceal the assets. Cheating the creditors and siphoning the money and avoid repayment, etc., etc. Examples: fake purchases. No purchases, raw material, but invoice is available. Once invoice is available, you verify the GST. Once it is a GST is a number is there or not, whether they have uploaded that particular returns or not. Bogus creditors. No creditors. The company will create some creditors and they will pay the amount. And that ultimately that amount goes to the promoters or directors. Circular fund transfer, A to B, B to C, C to again A. This type of funds transfer is also there. Fake invoice. Today, on account of artificial intelligence, this fake invoice, fake purchases, or bogus creditors, or circular fund transfer, it is very easy to detect. Very easy to detect. layering through shell companies. And new companies are opening. In that companies, no transactions, no production, no services, but number of transactions are happening in their current accounts. That's why even 5 years back, 4 years back, the Reserve Bank informed to all the banks, number of shell companies are increasing in India. And they have identified some 40,000 shell companies. And each company, they are having their current accounts with almost all banks. So today, to open a current account in the bank is a difficult one. Reserve Bank of India clearly told, don't open any current account. If at all the company is availing any working capital loan or cash credit, the transactions are to be routed through cash credit only, not through the current account. If at all any collections are there, particularly the schools and other things, for that you open the current account. Otherwise, if at all any accounts are opened wrongly, or if at all the company is having a loan account working capital and simultaneously the company is having a current account in the same branch, the branch manager is to be penalized. So most of the branch manager 2 years or 3 years back, they visited to different places. They interacted with the promoters of the current account and asked them to close. If at all loan account is there, current account is there, they have to close the current account and they have to route it this one. Particularly the shell companies. And I also verified 5 shell companies. It is there are 5 companies, not shell companies, 5 companies. And I have visited to the companies. Whenever the current account opened by the company, banks are not visited to the company's premises, where the registered office. We are depending on the documents, KYC documents like memorandum of association, articles of association, or a certificate of commencement of business, etc., etc., or board resolution to open the account. But bank has given 5 accounts to me. I visited 4 accounts, the companies are there. 5th account, the company is not there. Address is one apartment in a gated community. Then I entered into the gated community and the apartment number, and outside some company name is there, so-and-so company limited, and with the golden letters and all these things. And I knocked the door, nobody is opening. Immediately I asked the security. Then security told, sir, that is not a company, sir. Every 3 years, 3 months, they will come and they will chit chat and they will go. Immediately, whatever the registered office address I verified, and the production nothing, and I verified the current account. Crores of rupees are transactions are happening. So that is called layering through shell companies. Some of the companies, they are transferring the funds to the shell company. From there, they are withdrawing the funds. That is called layering in money laundering transactions. Red flags, no supporting the invoices. For a purchase transaction, invoice are required. Or bill of exchange is required. Or once the goods are supplied by the seller to the buyer, transport document is that is also not available. And purchase order is required for placing the purchase, that is not there. Or goods received note issued by the particular store department, that is also not available. So no supporting document or invoice for the purchase of the assets or raw material like that. Purchase of fixed assets. Same address for multiple vendors. Address, the name of the XYZ supplier, ABC supplier, PQR supplier, like that. But address is same. GST number is mismatch. And the PAN is mismatch. and round tripping A to B, B to C, C to A, high cash withdrawals, and backdated entries. So, if at all this is happening in companies, this is a red flags. You have to give more attention, concentration on these areas. So, backdated entities, detection of extraordinary credit transaction, extraordinary section, excessive interest. The prevailing market rate is 12%. But whereas one financial creditor, the company is paying 24%. That is why 24%? Once the market prevailing rate is 12%, why the company is paying 24%? Unconsensual loan terms. Loan terms, whatever the terms and the conditions are there, it is a standardized. Not no, you have to pay within 30 days or you have to pay within 3 months the total loan. Otherwise, this much rate of interest, that much rate of interest. Unfair advantage. And example, a borrower borrowing 4 crores carrying a 48% annual rate of interest with heavy penalties. This is unfair because the related party, the company wants to pay more and from there they want to enjoy the benefits. So that's why the detection is very easy, but subject to involvement, subject to practicing, or subject to idea, they understand what are the various related party transactions and the red flags. Interest above market rate. Interest above market rate. And once the interest is 12%, you have to supply you have to be particularly the 12% only, not 24% like that. Compound penalties. Normally, you will get the loan with normally you will get a simple interest. And but a compounding penalties. And the promoter control lenders. So the lenders who is lending the money to the company, that is a promoter controlled lenders. Short-term exploitative loans. So these are the red flags, particularly the extortionate transactions and the related party detection and the techniques. What are how you are going to detect the related party transactions? RP should verify first the Ministry of Corporate Affairs records. So if you go to the ROC website, the directors, with that in how many companies the directors are. And if you arrive the connectivity, particularly this director in this company, because today director is not restricted to one company, multiple companies. And shareholders. Who are the shareholders? These shareholders, particularly if the MCA records also some shareholders, there are only few, the top shareholders, there are different companies also. Charges, particularly section 77. Charges, the property charge. So once the company properties are charged with ROC, then you have to verify. In how many the lenders has the first charge, second charge, third charge, like that. SIN, corporate identification number with the help, and a group of companies. How many companies are there? If at all annual return is there, through annual return also, you can identify the group of companies. And ROC filings. The second one is ROC filings. Please verify the annual returns. The annual returns are to be verified by you. Once you verify the annual returns, then you will get a clear idea about the company, about the directors, and what are the holding company, what is the subsidiary company, what is the associated company, and the financial statement. What are the notes or disclosures that are mentioned in the financial statement? And if you verify the board resolutions also, and what type of resolution they have passed, and how the particularly some of the directors, whether they are interested or not, all these things are there in that particular one, available in the board resolution. GST database. You have to verify to identify the related party with GST comparing the comparison of particularly supply GSTN or a director PON or address. If you compare, the invoice is something, but the GST return is something. So here, this fraudulent transactions or related party transaction easily to be identified with the help of a GST. Income tax records, particularly the PON, the related concerns, TDS returns, etc. And the bank statements also. For identification of the related party transaction, the same bank accounts, frequent transfers, circular transactions, or the layering, all these things, it is very easy to find out. Email domain analysis, particularly with the help of email also, the authorized by the promoter or possibility of the related party. It is different sources. One source is they not accepted, different sources are there. And common indicators, same address, different companies, ABC, XYZ, PQR, same mobile number, same auditor, same authorized signatory, and the same IP, wherever available, internet protocol number, and common employees and common directors. This is common indicators. Through this also we can identify the related party transactions. Documents to be reviewed. In the related party transaction, what are the documents to be reviewed? Now we will break for tea, sir. After tea break, we will discuss about the other areas. Is it okay, sir?
Yes, sir.
Okay. Now we will go into the practical aspects. So far we have discussed about the sections or IBC or Companies Act, etc. Now we will go into the detailed practical aspects. Documents to review, to cross-check, or to identify the related party transactions. First one is a general ledger of the company, purchase register of the company, sales register of the company, fixed assets register of the company. Transaction is not the criteria to identify the related party. In the concerned registers, whether it is online or physical books, clear details are available. Even purchase price and all these things are available. So prima facie, whenever we are checking the ledgers, then we can easily identify whether any price change or any terms and condition change, etc. So the replica of the particular invoice or sale agreement is none other than the purchase register or sale register or fixed register or general ledger of the company. Once a sale was happened, the sale process are to be remitted to the bank. Whether the sale register or purchase register, the amount is cross-checked with the bank statements or not. Today, the number of softwares are came. It will compare with the bank statement versus your particularly the purchase or sales register. Any differences is there, that differences it will show in a separate report, GST returns and the income tax return and the trial balance. Today comparison is very easy on account of technology. Some of the companies ERP or the audit, particularly tally, etc. And with the help of that one, it is very easy. And the loan agreements, whatever the agreements that are reached to the particular this one, that also available. And security documents, whatever the security documents that are provided by that particular this one, that also you have to check the further transaction, you have to check it. And not only that one, the loan agreements or security documents, charge creation under section 77 or surface that CIRP charge creation and valuation reports of the company. Whenever the assets of the companies are sold, the valuation reports and the board minutes, these are useful for cross-checking of the various financial transactions, including the related party transaction and shareholders resolution and vendor master director. So vendors, particularly master will be created. The master is his GST number or a PAN number or the address or the details. Vendor particulars, master particulars are available. In the master particulars, almost full details of the vendors are available. And a customer master. Whenever the company is selling that goods on credit, customer master is also to be developed. Then it is available in the particular computer system. You please cross check that one. Related party register. The related party register is also available. So you verify the related party register also and the registers of contract, whatever the contracts that are happened during that particular tenure by the company, all are mentioned in the register of contracts, register of related party, register of contracts, and vendor master, customer master, all are available. And register under Companies Act, ERP logs, that entrepreneur resource the planning or this one, the logs are also available. and email communication. Whenever the purchase or sale is happening, then whether to vendor or to the buyer, the correspondence happen through communication. That is also useful for a cost checking. And not only this one, the modern CIRP investigations increasingly rely on data analytics. Today, data analytics, particularly IT system data analytics, that is very useful test. So Benford's law, that is, a Benford law states that in many natural occurring numerical data sets, leading digits are not uniformly distributed. Smaller digits appear for more frequently. Sometimes to swallow the funds by the company, they are using small amount and they will eat it away. So once small amounts are not verified, then it is also a problem. So that's why don't leave it that small amounts. Sometimes a more small amount is also the particularly fraudulent transactions or etc. Detect fabricated accounting entries. Sometimes during a financial year ending or a quarter ending, some fabricated entries they are passing. That also verify. Duplicate payments. One invoice, 4 or 5 times. The same invoice they are paying. And identify multiple payment to the same vendor. And the same vendor for the once they supply, they are paying different times the amount. And round amount analysis. You verify the round amount analysis also. Once any round amount, 10 lakhs, 25 lakhs or 50 lakhs amount is there, normally round amounts will not arise in the company, whether it is a sale or purchase. So suppose sale of the goods, 25 kgs into so-and-so amount or 35 kgs. So round amounts will not arise. So once a round amount is there, you please be attentive in those amounts. Repeated round figures may indicate manipulation. That is also one source. Not only that one, weekend transaction. Suppose starting, particularly month-end transactions or quarter-end transactions or year-end transactions, lot of malpractices are happening. Or related party payments are also happening. So, not during the month. So, once the volume of transactions are month-end or starting of the month or Sundays or holidays or midnight, if at all the companies are doing, because at that time, office is closed. Once office is closed, how they will do transactions on Sunday or holidays or midnight? Because some wrong transaction, some manipulated transactions they are handling. That's why these are also to be verified. Need scrutiny by the RPA or IRPs. Not only that one, sequential invoice testing. What is a sequential invoice testing? Invoice number 101, 102, 103, 104, 105. Once one company is supplying raw material, they are supplying to different buyers, not one buyer. If at all the invoice is continuing, then some wrong entry or manipulated entry or related party entry. Suppose if at all you are purchasing in one shop, the invoice may be 101. And after that, they purchase a number of buyers they will purchase, and the serial number may increase to 301 or 420 like that. But if at all 101, 102, 103, seems invoice number is coming from the same company in a sequence manner, then it is also one of the test. Particularly, the test is sequential invoice testing. Missing invoice numbers, backdated invoice, duplicate invoices. Once a duplicate is there, you have to verify thoroughly. Why duplicate? You verify the date of the particular transaction. In that date, when same amount is paid or not. And vendor concentration. The company is concentrating on one vendor only. Why one vendor? Once the market is a big market and the number of suppliers of raw material is there, why the company is concentrating on one vendor? Top 10 vendors receive 80% of the payments. So once 80% means the probability of error will happen in that particular top 10 vendors. And not only that one, dormant vendors. They are not supplying anything. They are not inactive vendors, suddenly receiving huge amount. Once for the last 2 years, I am not purchasing from that same vendor. This year, why I am raising the high value invoices? They are raising invoice and the circular transaction A to B, B to C, and C to again it come to the A and the financial ratios also. And you have to verify related party sales ratio. Out of the total sales, how many are related? If at all it is high, lot of checks are required. If at all 1% or 2%, then you can verify. Out of the total sales, how many related party sales? Related party purchases ratio. Out of the total purchases made by the company, how many are related purchases? And a cash withdrawal ratio. And to pay that amount, a cash withdrawal. And a assets disposal ratio. And how many assets are purchasing and how frequency the assets are selling by the company. And director loan ratio. And how many directors are there, how many directors they are availing loan, and that ratio. Advances to related party. Normally, whenever the company is purchasing any raw material, they will pay some advance to the suppliers. And if suppliers are a related party, then why advance? What is the policy of the company? Purchase policy and interest-free loans. You have to give more attention on interest-free loans. Why interest-free loans? Why the company necessity is there to give the interest? Whether he is a staff member, why they are a related party. If at a staff member is there is no problem. And once it is given to related party, then it will be a problem. And receivable aging. And normally the receivables are to be collected within 30 or 60, at the most 90. Why some debtors are 180 days or 360 days? 180 or 360 days. The receivables aging or particularly practical red flag indicator. Sales. If you say sale register verified, huge discount to promoter companies. And why they have given? What is the hidden agenda? You have to verify. Purchases. New suppliers. Why the company stopped the existing one and they have taken new, and the new supplier KYC is not updated. And the fixed assets. The fixed assets below the market value. Market value of the asset is 10 crores, but sold for 5 crores. And the loans, whenever the company is giving any loans, all loans are carries interest. Why some loans are not interest? And whether the loans are available by the director related parties or not. Inventory, missing stocks. Once inventory invoices are there, the invoices are to be reflected in the stock ledger or stores ledger. If it is not reflected, what is the issue? And expenses. Fake consultancy fees. The consultancy services are not engaged by the company, but some consultancy. How to recover the data, or how to overcome the liquidity problem in the company. Some consultancy. And sometimes they will create the fabricated invoices and particularly inventory, missing stock, and the expenses, fake consultancy fees, cash, large withdrawals. Today, almost all transactions are transfer transaction, no cash. Why the company is paying cash? Even income tax laws are also not acceptable. More than 20,000, it should be, or 50,000, it should be paid through crossed check only, or RTGS, or NEFT. And why the company is withdrawing cash and paying the cash to some people? Receivables. Whatever the receivables are there, that is the credit sales, old balances written off. Why they have written off? Why they have unable to recover the particular receivables? And all these things are to be verified by the resolution professional. Whenever this type of situations arise, payables, the related party paid first. Whatever the creditors are there, they are giving top preference to the related party, not the other creditors. Sir, any doubts up to this point of time? Am I audible, sir?
Yes, sir.
Any doubts, sir?
Fine, sir.
Any doubts, sir? No, no?
No, sir.
Okay. Obtain the complete financial records. Identify the related party. Review banking statements. Verify the statutory filings. Whatever the statutory GST or income tax, whatever it is there. And analyze the unusual journal entries. Why journal entries unusual? Because that is not a genuine transaction. That's why some general entries they entered and paying the amount, comparing the market values. Whatever the sale, whatever the purchases are there, compare with the market. If at all any aberrations are there, any high value is there, and you have to identify. Review board approvals. From time to time, the board approvals that to be verified by you. And the board approvals, particularly if at all related party, whether the board is given approval or not, you have to verify. And trace the funds flow, identify the circular transaction. Particularly A to B, B to C, or C to A, the circular transaction. Obtain the forensic audit if required. So, at the time of the claims verification, or at the time of the PUFE transactions, you have to thoroughly examine that one. Okay, the forensic audit services are available with you. You need not verify the 1 year or 2 years transaction. But whenever you are appointing any forensic auditor, he should be knowledgeable person, and whatever the directions you are giving, on that directions only you have to verify. And document findings. Whatever the documents are there, that documents are also to be verified. Seek legal opinion. Sometimes whatever the securities are created, or title dates, or sale dates, whether it is a genuine sale date or not, the legal opinion also to be obtained by the resolution professional. File application before NCLT where appropriate. Once you are identified the transactions, particularly this related party, or the PUFE transaction, or fraudulent, or extorted, or undervalue, or preference, you have to brought to the notice of the adjudicating authority in addition to the committee of creditors. Role of the forensic auditor. Once you are appointed the forensic auditor, what is his role? The clarity is required. Simply give the appointment is not the criteria. And during the claims also, whatever your findings are there, the findings are to be informed to the forensic auditor. And if at all you found the siphoning of funds, or whenever you are interacting with the staff, you please highlight whatever your observations to the forensic auditor appointed by you and confirmed by the COC. Diversion of funds, if at all, that also he has to verify. Layering, that is a money laundering transaction. shell companies, if at all the company is opened any shell companies or transfer the funds through shell companies, that also he has to find out. Money laundering indicator, fake invoices, the particularly whenever you are appointing the forensic auditor, you have to highlight whether fake invoices are there or not, circular trading, connected parties, and digital evidence and manipulated financial statement. All these things you have to get the work from the forensic auditor. Simply forensic auditor, even though the companies, the RP or COC is approving huge amounts, you have to extract the work from the forensic audit. Manipulated financial statements. Obtain both the important evidence before NCLT and technology tools for detection. The RP can be leveraged technology to improve the efficiency and the reliability of the investigations. The ERP data mining, bank statement analysis, AI-based anomaly detection, network analysis of the directors and entities, link analysis related parties, GST reconciliation tools, and MCA database search, and particularly email metadata analysis and optical character recognition based invoice verification and data visualization dashboards. So you have to use technology. Even artificial intelligence in CIRP is also very much required. Because of voluminous data, it is very difficult to handle by single RP. If at all the companies are not defunct and the companies are going concern and the company are having a voluminous transactions on day-to-day basis, technology tools are inevitable. So that's why the data mining is one important area. Bank statement with the companies, the transactions are to be cross-checked, and AI-based anomaly of detection and directors, entities, network, whatever, how many companies the directors are there, and GST reconciliation vis-a-vis the sales and the purchases of the company, and MCA database searches and email meta data analysis. All these things are to be cross-checked. Case study 1. Preferential transaction. Background. 6 months before CIRP, the corporate data repaid 5 crore to company owned by the promoter, while payments to operational creditor remained outstanding. Analysis. The repayment was within the applicable look-back period to a related party and resulted in that creditor receiving greater benefit than similar placed creditors. So, actually, 6 months before the CIRP, corporate data repaid 5 crores owned by the promoter company, while payment operational creditor remained outstanding. They have not paid to the operational creditor, but whatever the directors owned company is there, they have paid 5 crores. On the analysis, the repayment base within the applicable look-back period, that is 1 year. To a related party, up to 2 years you can go. Resulted the creditor receiving greater benefit than similar place. Other creditors are not getting benefit, but this creditor is getting a benefit on account of this one. And second, in this particular likely conclusion is, the RP should examine whether payment constitute a preferential under section 43 and if supported by evidence, seek appropriate relief from the CLT. So, if at all you verify the high value transactions, definitely some of the transactions may have the preferential or undervalue or extorted. Undervalued transaction. Machinery with an independent valuation per 12 crores. Sold for 3 crores to an entity which promoter is a relative was the director. Analysis. Significant gap in market value and sale consideration, coupled with the relationship with the parties, raises concern regarding the undervalued transaction. Once, whenever the assets are selling or sale is started, the first company will value the assets. The value report is also there. And if you verify the report, whenever the sales are, whatever the assets are sold, register, whatever the assets are sold, what is the valuation report? Cross-check that. Which is the promoter's relative is a director. And a likely conclusion. The RP should gather valuation reports. You have to gather the valuation reports. And the board approval. Once the assets are to be sold, simply without board approval, whatever the company assets they are selling, that too the value is 12 crores and the sale is 3 crores. The board value, the approvals are also required. Transaction record and the consideration under section 45. And the fraudulent transaction. During the review, the bank statement and the purchases record, RP observed multiple high value payments to a newly created vendor. In the master of the computer master, they have created one new vendor. The vendor shared the same registered address and contact details as existing promoter controlled entity. So, existing promoter controlled entity, the contact details are given by that particular new vendor and no evidence of actual supply. So, once the goods are supplied, it should be recorded in a goods received note. And once the goods are transported by vehicle, transport document, and bill of exchange, and GST, all are required. But in this case, no evidence of actual supply of goods or services could be found. Analysis. The transaction displays several fraudulent indicators, including the lack of supporting documentation, common ownership indicators, and the possible of diversion of funds. So, for each and every financial transaction, daily, if at all you verify 10 transactions or 20 transactions, definitely it will be completed within a short span of time. Accordingly, you made a conclusion that if the company requires forensic, then based on your verification and the claims submitted by both operational creditor as well as financial creditor or class of creditor, then you have to inform to the adjudicating authority or through COC that forensic audit is required. Otherwise, no. And a likely conclusion. A detailed forensic review should be undertaken. And if evidence establishes intent to defraud the creditors, proceedings under relevant provisions of IBC, including 49 to 60 and 66, where applicable, may be initiated both undervalue and fraudulent transaction. And what are the best practices that are adopted by the resolution profession? Here, once you are handling the CIRP process effectively and efficiently, these are the cakewalk for you. But at the same time, all RPs should have the financial background also. That's why in the LIE exam also, the IBBA has designed in such a manner the financial statements, in the syllabus also financial statement, forensic audit, all these things are there. One mark or two marks like that. So, whenever you are verifying the claims, financial background is required. Whenever you are identifying the PUFE transaction, background is required. Whenever you are identifying a forensic auditor, and you have to appraise the company's financial position, then to some extent you should have the knowledge of the financial system. Being a PUFE, screening immediately after the commencement of the CIRP. Why? Because the adjudicating authority submitted, then he will give a session or reverse that particular transaction before completion of the CIRP. If at all you are given that PUF transaction in the lost, there is no time, or if NCLT is not extended, then it is a problem. Prepare a comprehensive related party mapping using MCA filings. And you have to prepare the worksheet and comprehensive related party mapping using MCA filings and statutory records and internal data, etc., etc. Preserve electronic records and maintain document chain for custody of your digital evidence. That's why whenever you are reporting as a resolution profession, the first area is you have to stop the bank transaction and authorized signatory is yours. Then you have to provide the bank the NCLT order and change the authorized signatories of the account from earlier promoters to your name. That is the rule number one. Step number two. Immediately on reaching that company, after introduction is over, you have to call the IT official who is handling the information technology or computer system of the company and disable or all the user ID and password, whether it is a tally or ERP, etc. Second one, you ask that a particular IT person, IT of the company, information technology of the company, get all the backups. Backups means the storage of the data, whether it is a tapes or whatever, a pen drive or whatever the backups are there, and put it in your custody. And not only that one, whenever the new the once you are blocked that one user ID and password, the concerned department official will come in the presence of IT person. You have to give the user ID and password based on their requirement and take the backup of all the data. Otherwise, what will happen means once you have reported, some of the department heads, they will change the data also. Prepare a comprehensive data related party using MCA filings, statute records and internal records. Preserve electronic data records, that is through backups, and documented a chain of custody of the digital evidence. Use independent evaluation experts and where asset transfers under scrutiny. And whatever the assets are transferred, you get the independent values and arrive the valuation. Correlate the accounting entries with the bank statement. If at all any purchases payments are made, whether the same entry is reflected in the bank statement in debit side and here in the cash side credit and the matching through NEFT or RTGS or check the amount to be tallied with the invoice and the contracts, whatever the contracts are there, board approvals are also you have to verify, and the GST records and tax filing. These are the available documents for cross-checking of various transactions. Best practices. Maintain detailed working paper supporting the findings and conclusion. Whatever your findings are there, whatever your conclusions are there, write it on a book. Whenever you come across any wrong transaction or related party transaction, and what are your conclusion, mention in the book. This book is useful whenever you are verifying, whenever you are submitting the report to the NCLT. Engage the forensic experts in complex cases involving suspected diversion or layered transaction. So, competency is very much required. The forensic auditor competency is required. Keep the committee of creditors appropriately informed the significant findings and consistent with the legal and confidentiality requirements. Whenever you find any aberrations or misappropriation of funds or siphoning of the funds or related party transaction brought to the notice of the COC and ensure compliance with the regulation 35 timelines for identification, determination, reporting of the above transaction. Don't be delayed if possible at the earliest, so that if chance is there, the NCLT will give the orders to reversal the transaction within his jurisdiction. Base all applications before the NCLT on documented evidence and sound legal. Some of the people, particularly the forensic audit, simply they are giving this entry is treated as a PUFE transaction, the preferential transaction. No, with evidence. And what are the evidence? Whether it is a invoice or bill of exchange or bank statement, or all are to be mentioned properly in the report. And tomorrow, if at all any reversal is there or double check is required, the particular folio number or transaction or bank statement, all these things, cross checking is useful. Caselets. Interest-free loan to director partnership. Directors partnership. ABC Engineering Limited entered into CIRP on 1st April 2026. During verification of books, resolution professional noticed that 8 crore had been advanced 2 years earlier to Sunrise Associates. The advance carried no interest. So the RP rule is whenever the loans are there without interest, you please check double or triple. It is not a charitable institution. It is a company, that too commercial business. Why the company is giving free interest rates? Okay, for staff of festival advance and other things. So sometimes the company will give the free loans to the staff members, not to others. Once a free loan is there, 100% chances that it is a related party transaction. No security was obtained. Okay, one side there is no rate of interest. Second side, no security. Further investigation revealed. One director of ABC Engineering, Mr. Rajsekhar, is also 50% partner in Sunrise. This director is a partner in that cetera. Nobody resolution is approving this transaction. Once the board approval is not there, how that funds are transferred to that particular the Sunrise Associates? No written loan agreement. Once the loan is given, the contract, it is a contract. The contract agreement terms and conditions are there. If that is not there, it is a fraudulent transaction. And the amount remained outstanding on the insolvency accounts. Once without security and zero interest, that to related party definitely not recoverable. The partnership firm had not supplied, particularly only 1 minute, sir, only 1 minute. Sorry, sir. Further investigation revealed that one of the directors of ABC Limited Rajesh 50% in the sunrise. Here, what is a no board board resolution, interest free, and no security. The partnership firm had not supplied any goods. All whatever the wrong the characters are there in the transaction, all are there in the transaction. One is not supplied any goods, and the second one is the agreement is also not there, and whatever the errors are there, all errors are there in this particular case also. Now, sale of factory land to promoter's wife. XYZ Textile Limited sold factory land having independent valuation of 40 crores to Messrs. Green Valley. Developers for 18 crores. The sale occurred 18 months before CIRP. The related party transaction look back period is 2 years. 18 months. Definitely it is come under the look back period, particularly the related party transaction. But the valuation report is 40 crores. But whereas that sold to 18 crores. And during the forensic verification, the transaction auditor discovered the purchase company wholly owned by the wife of the managing director. Payment was received over 5 years without interest. Position was transferred immediately. No competitive bid were invited. The board minutes recorded only that the land was no longer required. The board minutes they recorded only that the land is owned, but whenever the sale is happening to a wife of that promoter, she is the managing director of the company, and all these things are to be mentioned in the resolution that is passed by the board of directors. Simply no longer required means that is not correct. And the purchase of raw material from sister concern. PQR Chemicals Limited regularly purchased industrial chemicals from Universal Chemicals Private Limited. During CIRP, the RP observed that one common independent director serves the both company boards. No promoter or controlling the shareholder is common. The supplier won the contract through documented tender process. And the prices match with the prevailing market quotations. Payments were made within the agreed credit period. All deliveries are supported by invoices, e-way bill, and the goods receipt note. Here, common independent directors. No promoter controlling the shareholder is a common. The supplier won the contract to document tender process. Prices are matched. All these things are there. Payments were made within the all deliveries are invoices and e-bill. But here that here during it is observed all deliveries are supplied by invoices and all these things. Next one is repayment of loan, particularly the holding company. Repayment of loan to holding company before CIRP. LMN Infrastructure Limited entered CIRP on 1st January 2026. 6 months earlier, the company repaid 25 crores to holding company. And in this particular one, at that time, employee salaries remained unpaid. GST dues were outstanding. Several operational creditors had not been paid for more than 1 year. And the holding company demanded immediate repayment. No further financial creditor received during that period. So here also, it is a preferential transaction. That too, employee salaries are not paid. GST not, the dues are outstanding. And all these are kept pending and paid to the holding company, which is a preferential transaction. And the critical related party transaction require detailed examination. You have to. and particularly the sale of fixed assets to promoter group of a very high risk level is very high. Purchase of goods from related party high, sale of goods to related party high risk, and interest-free loans to the directors very high, advances to sister concern very high risk, and corporate guarantees and issued for group of companies very high, mortgage of assets for loans of related parties very high, and a waiver of loans due to the related party very high risk, and right of receivables from the promoter entities, it is also very high, and payment of old dues to the promoter companies before CIRP, that is also very high risk, and the transfer of trademarks or intellectual property, high risk, excessive remuneration to the directors, medium risk, consultancy fees to the promoters who owned company, the high risk, and the rental payment to promoters who owned properties, medium risk, and the purchase of shares of a related company, high risk, and the investment in subsidiary without a commercial purpose, high risk, cash withdrawals by the directors, high risk, and the general interest transferring liabilities, very high. Liabilities are general interest transferring liabilities, very high. Circular funds transfer, high risk. Settlement of related party before insolvency, it is also high risk. And now we will discuss about 3 to 4 judicial pronouncements. Under this judicial pronouncement related party concept, related party is a critical importance because it is directly affect the constitution of the Committee of Creditors. If at all you have not properly identified, the COC formation is wrong. Once it is wrong, whatever the particular resolutions pass, that is also wrong. Voting rights, eligibility, resolution applicants, avoidance, collusive, and the overall fairness of the corporate insolvency resolution process. In this, I will discuss about 5 judicial pronouncement. One is Phoenix ARC Private Limited versus Spade Financial Services Limited. This is a 2027. Court is Honorable Supreme Court of India. The background is the issue before the Supreme Court was financial creditor who has ceased to be related party before commencement of the CIRP could nevertheless become member of the Committee of Creditors. Suppose one of the financial, particularly the financial creditors, ceased to be the related party before commencement. So, in that case, even after particular CIRP formation, before CIRP, he ceased. The financial creditor ceased to be the related party, and the company is facing CIRP. Whether the same person to be acted as a member in the CIRP for that particular transaction or not, the Supreme Court told whether a creditor was a previously related party but ceased to be one before CIRP can participate in the COC, whether transaction entered into the promoters to influence the insolvency should be recognized as a genuine financial debts. Here the transaction is very important. So in that case, before CIRP, the financial creditor is seized the related party. It means if at all that a person is a board of directors of the another company, the group of the company, that is he vacated. But that loan is given by that person to the corporate debtor, whether he can act as a COC member or not. Here, the Honorable Supreme Court clearly told, previously related party, but ceased to be one before CIRP can participate, but the transaction is also to be verified carefully. simply vacating for the purpose of to they participate in COC of the CIRP of the company, that is not correct. Phoenix and Spade Financial Limited, another judicial pronouncement. The purpose of excluding related party from COC is to ensure independence of the committee. Court must examine the substance of the transaction rather than merely the legal form. If the creditor is seized to be the related party, merely to avoid under section 21 subsection 2, such a creditor still remains disqualified. Here the point is raised. Suppose if the creditor seized to be the related merely to avoid, then only he is not eligible. He should be disqualified. Otherwise, he is eligible to participate in COC. Fake collusive financial arrangement cannot be used to gain voting rights in the COC. And principal late domain, substance prevail over form, the creditor cannot escape the disqualification merely by resigning the director or transferring the shares immediately before the commencement of practical significance. What are the practical significance? The resolution professional must carefully investigate the timing of the resignation, the share transfers, the management control, the commercial relationship, and the intention before restructuring. All these things are to be verified carefully. No, sir. If now today I am not the related party, sir. Earlier I am the related party. I resigned from that company. Now I have given some loan. I want to I am the financial creditor of the corporate data. Now I am eligible for participate in COC. Means here, if at all bad intention is not there, definitely you can participate. If at all the intention is wrong, then he is disqualified. But as the resolution professional, you have to carefully investigate the timing of the resignation. When he has done, before when the particular 1 month before the CIRP commencement date or not, all these things you have to verify. Share transfers, management control, commercial relation, intention, all these things. Second one, Phoenix ARC, Kutul Bhai, Rama Bhai Patel, and others. This is also 2023 Supreme Court. The dispute related to discriminate against a related party creditors under the approved resolution plan. Issue whether related party financial or operational creditor could be denied payment merely because they are related parties. Whether related party financial or operational could be denied payment merely because of the related party. Discrimination against the related. You should not discriminate whether the related party financial or operational could be denied for payment merely because of the related party. No. Whatever the waterfall mechanism is there, that you have to adhere. No, he is a related party, I should not pay. Non-related party only I will pay. Like that distinct. Only he is not eligible to participate in the COC and he is not eligible for voting rights. Judgment. Related party are excluded only where the code expressly provides. Section 21, COC participation. Section 29A, not to participate, is disqualified under Section 29A. Beyond these statutory restrictions, they remain creditors under the law. We should not deny, we should not reject their claims. A resolution plan cannot arbitrarily deny payment solely because of the creditor is a related party. Cannot arbitrarily deny it. the payment solely because he is a related party. Principle laid down is related party constitute a separate class only for the purpose of specifically provided under IBC and cannot be discriminated related and non-related because he is not participating in the COC, he is not having the voting right. And practical significance, the resolution professional and COC must ensure equal treatment with the same clause, except the voting right and participate in the COC meeting. Commercial justification for differential treatment and compliance with section 20, subsection 2. The third judicial pronouncement is rare asset reconstruction versus VR2 Land Development Private Limited. It is NCLAT 2025. A debt originally held by related party and assigned to asset reconstruction company. The question was whether the assignee could be participate in COC or originally the debt is a related party. Thereafter, the debt is transferred to the ARC. So whether the ARC, the who acquired that loan from the related party becomes a related party or non-related party like that. The question is whether the assignee could be participate in the COC or not, judgment. NCLAT relying on the Supreme Court decision in Phoenix ARC. The disability under section 21(2) attaches the related not permanently to the debt. A bona fide assignee that is independent and not related to the corporate data is entitled to participate. Even though it was a transfer to ARC, ARC can participate in the COC. However, if the assignment is made only the circumvent the section 21(2), the resolution professional may be discarded. So here, assignment is for the purpose of to participate in the COC, then it may be disregard. The principle laid down is genuine assignment of debt removes the disqualification. But only 1 minute, sir, only 1 minute. So a timing of assignment, all these things are to be verified. Next one, logics, infrastructure related party insolvency, NCLAT. Background. An insolvency petition was filed by alleged financial creditor. Investigation revealed that overlapping directors and business connection between the creditor and the corporator. Judgment of NCLAT. The petitioner and the corporator was related parties. The financial debt was not a genuine arm's length transaction. Not a genuine arm's length. The insolvency proceedings were initiated through collusion to obtain the voting rights of the COC. Proceeding constitute fraudulent initiation under section 65 of the IBC. It is a fraudulent transaction. And principle laid down, the IBC cannot use it as a tool for collusive recovery proceedings or manipulation of a COC composition. The practical significance is the resolution profession should examine common directors, common shareholders, related LLPs, financial statements, the documentation and the commercial substance. If at all you are verified thoroughly, all these things, this type of situation will not arise. If at all any lacuna is there, then it will be a problem. The last one is NCLT Mumbai ruling related parties committee of creditors. What is that ruling? The issue whether the creditors who related party had been wrongly included in the committee of creditors. Judgment. NCLT reiterated section 21 subsection 2 expressly prohibits related party financial creditors from the participating in the COC. So if at all the related party wrongly included in COC, then the objective is to prevent bias and conflict of interest. Inclusion of related parties would defeat the independence of the insolvency resolution process. So once the related parties are wrongly included in the CIRP or COC by the RP is not properly verified, later on it was found, then whatever the CIRP is in process, all are the wasteful exercise only, then the adjudicating authority may reverse that particular CIRP also. Principle laid down, independence of the committee of creditors is the cornerstone of the CIRP. For that purpose only, the related party should not be the part of the committee of creditors. But the practical significance, before constituting COC, the resolution profession should verify thoroughly the exclusion of related party from the COC is intended to preserve the independence and integrity of the insolvency. Because you are there in that particular process as an IRP. And if at all you have not segregated the claims, the financial creditor claims properly, non-related and related, then it will be a problem. Later on, so many issues will arise. Courts will examine the real commercial substance of the transaction rather than formal legislation. So here, verify the transaction by the courts. They will verify the commercial substance on account of that transaction, whether anybody is benefiting that CIRP process or not. In that angle only the courts will verify. Fake resignations before CIRP, if at all I am the related party, I resigned then and I have joined in the COC means that is not correct. Fake resignations, share transfers and a debt assignment to circumvent the IBC will not recognize that type of situation. If at all it is a genuine assignment, If at all it is a genuine share transfer, if at all it is a genuine resignation, definitely they can participate in the COC. Otherwise, not. Genuine assignees of the financial debt who are independent of the corporate data may participate in the COC, subject to scrutiny of the bona fides. That is also very, very important. Related party status does not automatically extinguish the creator's rights. Restrictions apply only the IBC expressly provides 21 Constitution of COC and 29A. So all are eligible. Related party all are eligible except to participate in the committee of creditors, voting rights, and submission of a resolution plan, particularly under the disqualification 29A. Not generally the principle across the insolvency. Across the insolvency, all facilities, all whatever the particular principles are there, they are eligible, except these two. That is a 21 Constitution of COC and a 29 disqualification of submission of resolution plan. To sum up, the detection of related party and the PUFE transaction, one of the most significant value preservation functions performed by the resolution profession. Here, if at all any wrong or errors are there, then value maximization will not happen. The structured investigation, that's why the financial knowledge is also very much required for the resolution profession. Combining the legal knowledge, accounting expertise, forensic techniques are also required. Technology, particularly you have to use the artificial intelligence and machine learning and professional skepticism can uncover the transactions that have depleted the corporate data estate and facilitate appropriate recovery actions. Appropriate recovery actions. Effective identification and reporting of such a transaction, particularly the related party transaction, not only enhances the recovery, but also uphold the core objectives of the IBC. So the transparency possible once you are segregated the transaction related and non-related or unrelated party. Fairness is possible. Maximization of asset is also possible once the classification of the transactions related versus non-related or unrelated, this one. During CIRP, RP should not only solely on section 5 subsection 24 of IBC, a robust investigation is required. Particularly the sections 5, 24, 43, 45, 49, 50 and 60 identify the related party in the PUFE transaction. Not only that one, you should understand the Companies Act 2013, particularly with regard to related party transaction. Section 2, subsection 76, 177, 184, 185, 186, 188, and 189 to verify the legality and approval process of the disclosure of the related party. Not only that one, the regulation or accounting standards are also to be familiarized. Accounting standards, particularly Accounting Standard 24 related party disclosures or Accounting Standard 18 as applicable to the company reconcile the financial disclosure with the statutory records. So this is in brief what I wish to tell with regard to related party transactions. And related party transaction, if at all properly not identified, then it is a problem. To overcome that problem, adequate financial skills, adequate investigation skills, or detection of the particular related party by following the Companies Act 2013 sections, as well as IBC code sections and regulations and forensic audit skills are required. Then only the fair and value maximization of that particular transactions will happen, of CIRP will happen. Otherwise, maximization will not happen. So one side, the company is failed on account of some irregular activity. During CIRP also, if at all wrong classification is there, related parties are classified as unrelated means, then double effect will be there in the CIR, the company. So to overcome this problem, we have to classify the particular related, unrelated properly by following the various acts. This is in brief about the related detection of the related party trust. Thank you very much. And if at all any doubts are there, we will discuss. Otherwise, thank you very much and good night to all. Shall I close this one, sir?
If there are no questions, then we can conclude, sir.
I'm concluded.
Participants, if you have any questions, kindly ask. Otherwise, we have to conclude the session. Yes, sir, there are no questions. So
Okay, madam.
Thank you very much, sir.
Thank you, sir. Thank you, sir. It was really very nice.
Thoughts and experience about the topic.